Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at this disclaimer on the page. Neither Market Chameleon, Dimitri, or myself are registered investment advisors or broker dealers. If you need investment help, please search out one. This show is for informational purposes only concerning the Market Chameleon tools. With that, welcome, Dimitri. How you doing?
Good morning, Will. How are you?
Good.
Good morning, everyone. I am going to share my screen here. And quick note to anybody joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you have about the Market Chameleon tools, the data, or the analytics. If you do have a question, type it into the live chat on YouTube. Will's keeping an eye on it. He'll let me know and read back those questions. To give you guys a couple minutes to put those questions in, we're going to take a look at our pre-market report, which we are on right now. See if we could get insights, what's going on in pre-market hours, and then we're going to move on to the questions. Okay, so with the pre-market report, we see this calendar view up top, and this does allow you to go back to a historical date if you wish to see what happened in the pre-market hours on that date. We display here the last 1 week's of data from a summary, top level summary statistics. So you could just kind of eyeball the data and see what typically happens, if there's any particular trend or something unusual. Today, we are on March 26th over here. And so far, we have 556 stocks trading higher in pre-market, 259 stocks trading lower. There are 175 million shares trading on up volume versus 40 million on down volume. And if we convert that volume to dollar value, we have $3.7 billion worth of stock trading higher versus $332 million worth of stock trading lower. And so far, that from this perspective, it indicates that there is a bullish lean in the pre-market trading. If we want to, let's move down and look at it from a couple more perspectives before we get to the questions. While I'm scrolling down here to kind of the middle of the page, we get a more granular view of what's happening in the pre-market. So we see stock symbols with price changes, volume, market cap, alerts, and here we could we have our most active stocks, our biggest percentage gainers, and our biggest percentage decliners. We have 102 stocks that made our biggest percentage gainers list, 37 on our biggest decliners. So from this perspective, it also points to a more bullish bias in the pre-market trading. Now, to make this list, we do set certain thresholds in place because stocks in the pre-market tend to trade with less volume, less liquidity. So if the stock does meet our thresholds, it could make it onto this list and include small market cap stocks. It could be an ETF, it could be a leveraged product, it could be an inverse ETF. So to narrow this list down further to a small group of stocks, we could use the filters above. If you have a watch list, then you track a certain group of stocks and you save that watch list, you can filter this report by that watch list. We're going to use this filter here in ETF, for example. So when I click on it, you get a drop-down menu to select from. Here you see different ETFs. We're going to choose this one, SPY, which is the S&P 500 ETF. Bless you. And when we select that, you could see that the list below got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here, 14 stocks made our percentage gainers list, 5 on our decliners. So from this perspective, it also indicates a more bullish bias in the pre-market trading. So I give it a couple minutes. If you have questions, I think I'll take them now.
No questions. Rob mentioned something interesting. I guess there was a discussion on CNBC just before he came on the show. It was from the head of Bespoke, and he stated that the S&P 500 had a streak of 100 days without a pullback of more than 2%.
Yeah, it's been basically like almost. Let's take a look at the.
He said historic. Then Rob goes on to say historically, he stated that this has predicted a rise of the S&P of a median gain of 8% 6 months later, and its record of 100%. Amazing. I'm gonna have to try to go back and check that out. That's cool. Thanks, Rob.
Yes, thanks. So yeah, see, since November, just kind of going up in here. So yeah, been very, very strong bullish market so far. But that's the SPY chart. Let me see, since we don't have any questions, maybe what we'll do is let's take a look at our options volume report. And over here, what we see is that these are all the stocks that have options that that have options listed, and they had trades, and it's basically organized here by the biggest volume trades. So I think by notional, right? So I think this is So this is auto sorted by the most volume traded in these stocks by notional value. And maybe what we could do is just take a look at it, see if we could get some insights here, and we could go to a report, maybe dig a little bit deeper. So here we see NVIDIA made the top of the list. It traded $3.32 billion worth of options yesterday in dollar value. And that compares to a daily average of 2.7 billion. So you could see yesterday traded above that historical daily average. Here we see that that's 1.6 times greater than the historical average, or the daily average if we use 90 days. If we split that between calls and puts, $2.5 billion worth of options traded in the calls, 800 million in the puts. So this shows that, a big lean towards trading calls, right? Like you can see there it's like 3 times great. Further breaking it down, we see that 72% of the orders were single leg orders, basically buying or selling the call, buying or selling the put, and 28% of the trades were multi-leg trades. So multi-leg trade could be call spread, put spread, butterfly, whatever. It involves more than one leg. And just interestingly here, usually SPY would be number 1 or 2. MSTR made the number 2 spot, which is is it a Bitcoin play at this point? Well, would you say
MicroStrategy? For sure.
So it's like a leverage.
It's a leverage. Yeah, you're right. It's a leverage Bitcoin play.
Leverage Bitcoin play. That made the number 2 spot here, and that traded $1.1 billion worth of stock, and that's more than 4 times its daily average. And here we see $837 million worth of call options traded versus $169 million worth of puts. That also shows that there's a big preference for calls, right? A much bigger preference for calls than for puts. 69% of those trades were single leg trades, 31% were multi-leg trades, and SPY fell to third place. Tesla now is in fourth place, and it held the number one spot for a very, very long time. I think Tesla was, and it's still trading quite a bit, $741 million worth of options traded yesterday, but you could see there it was in the 2 billion daily average, right? So that kind of started to come down, trend lower. Nvidia really has been taking that number one spot from what I've been seeing, ready for reclaim that spot for a while, a while, since it's been on this big bull run this year. And then SPY down here, number 3 right now. So maybe let's take a look at MSTR. 31% of those traded in multi-legs. So let's see if we could get some insights of what's going on in MSTR. And then we could come back, maybe take a look at Nvidia, but this one might be interesting because it's not every day I see that up there. So this is MSTR, and I'm going to go under options, and let's pick the multi-leg trades. And what this does is it filters. So this report, oh yeah, by the way, we did add an explainer here. So if you just wanted to get more insights, what these data elements mean, you could just click on this and tab through it, next. But I'm going to close it for now. And what this report is doing is sectioning off the options trades that were just multi-legs in MSTR from yesterday. Then it stitches the data together and makes interpretations of the strategy and creates this report. So this is our proprietary software doing it. This the multi-leg trades, on the tape, they just come out as, a little bit of, they tag in multi-leg trades, but then you have to stitch all that data together and make the interpretations. So from the top level right now, we see that we detected 51 different strategies that were used yesterday in multi-leg trades. So strategy could be a bull call spread, bear call spread. I'm sorry, a call spread. That would be one strategy, bullish or bearish. Put spread, butterfly, those are 3 different strategies, right? So 51 different types of strategies. And here we see total volume, 24,212 contracts were involved in multi-leg trades yesterday. And the unique combinations were 2,447. So just from that level, it looks like there were lots of different uses of multi-leg trades yesterday, right? And it's not like we detected one strategy and one unique trade. There are lots of different uses of multi-leg trades yesterday. And if we click on it and open it up, this almost itself is, now this is a filter. If we click on it, and we could look down further. But what this report is doing is showing us the different types of strategies we detected. So these are the names of them: call spread, put spread, ratio. Next to it shows us the total option volume in those spreads, and then the different unique combinations. So for example, the call spreads were on the top of our list because it had the most number of contracts, right? Put spreads had 8,404 out of the 24,000, and put spreads beneath it had 7,000 contracts that traded. The unique combinations, there are 786 different unique combinations. So what does that mean? Let's click on the call spread. And now when I do that, here are the details for all these call spreads. So what makes it unique? Well, here's a call spread, March 28th, the 2,100, 2,200 call spread. Underneath it, well, we have the same expiration, March 28th, but this one was the 2,150, 2,750. So you could see that the strikes are different, right? So that makes it unique. Different strikes, they're even different dollar amount apart. First one's $100, the next one's $600. So that's what makes these different call spreads unique. Now, within this call spread, let's just take the top one. What we detected was from 952.47 to 357.49. 952.47 is the first time we saw this particular call spread trade. The last time was 357.49. So you could see it spanned throughout the day. It wasn't just one trade or in very short period. And there are 590 contracts total in the spread and traded 31 separate times, right? So that's this particular call spread. And if we wanted to see those details, we could click on the open. And now these are the 31 different trades, right? We can just expand it. And here we see, starting 952, traded for 560. These are the different prices. These were the bids and offers. And if you click on it, you get the details of that trade, the time and sales. So you could see here, it traded on multiple exchanges. I see it on ICE, SIBO, MIAX, PHLX, multiple exchanges, traded at many different time periods and at different prices. So what is the takeaway from there? It certainly, it could be one trader that is trying to build a position or accumulate this particular spread, and he is trying to get better prices, and along the way he was chasing it to get his fill, because he couldn't get all his 590 whatever he got at one time. There's not enough liquidity. There's 196. So he had to perhaps go to different exchanges, bid up the price, especially as the stock was moving up. It could also be something different. It could be that this particular call spread maybe was recommended somewhere. It could be where there's a newsletter or a social media or a group somewhere that has multiple members, and it was recommended, and maybe a bunch of them decided to do the spread. They were doing it at different times of the day. That could be the case too, or just perhaps just by chance, different people decided to trade this same spread. So it's not very conclusive, but when we look at the times a little bit closer, like you could see here from 9:53:17 really quick, like these are probably related, so that looks like one big trade here. 10:02:57, these might be related. They just got executed on different exchanges. So some of these are very close together, the timing, suggesting that it might be, the one order trying to access multiple exchanges, trying to get the fill, and just got it executed in piecemeal. So that's another takeaway from just looking at the data and at the timestamps, because if it was lots of different people, you'd probably see it would be hard for everybody to simultaneously put it in or within a second of each other. You'd probably see more space between those timestamps. So that's one, that's kind of building a inference of what probably happened around here. My takeaway would be that a lot of these trades, are part of one order, like this 82,444, just looking at the timestamps here, a lot of these trades. So it doesn't look to me like 31 different people entered in trades. A lot of them were related to the same order. What about, how this trade got filled, the price versus where the dealer markets were? Well, here are the dealer markets. So you could see here the dealer markets were 370 bid $6, 350 bid $7.25, 350 $7.25. So the dealer markets are quite wide. This is like what's the price of this stock? 1,800, so it's a high price stock. The markets are fairly wide, and it looks to me, for the most part, that these trades, these executions, were done somewhere in between the markets. So there's room for negotiability there, right? Because they're being executed. You could see 560, that's closer to the offer, but it's not the offer. 564, 560 here. That looks to me like maybe somebody posted a bid and got hit. But you could see here that most of these trades, although it looks like to me, closer, maybe getting bid up closer to the offer, and I'm just eyeballing it here, but they were able to negotiate something better than just taking the offer or hitting the bid. Right. So there's still room there to place orders somewhere in between the market and get a fill. Okay. So even though markets are wide, what this is telling us is that, there is potential there for price improvements. Okay. So that's how, and it looks to me like as the day went on, the stock went up, but they continued to trade this spread. Right. In the last trade, 357 was $15.50. Let's take a look at how the open interest changed in these two options. So here is yesterday's data. So yesterday, the open interest in the March 210 call was 153. The open interest in the 220 call was 378. But the open interest today, now we're looking at today's open interest, you could see that it jumped to 661 on the March 210 2100 call, and jumped to 794 on the 2200 call. And these were the changes. One increased by 500, one increased by 400. So even though, the spread traded 295 and 295, right, on each leg, without seeing the other trades right now, we'd have to look, perhaps this added to open interest. Like this is a trade that increased open interest, meaning that whatever traded yesterday stayed committed and the position still exists, right? We'd still have to go see the other trades. that were part of these legs, but this is just kind of a first indication of, how did the open interest change on these two legs relative to the volume in this spread. Furthermore, this is where the last bid and offer came out, 1280, 1895, very wide. So it's hard to, the VWAP price, volume weighted average price yesterday was $8.09. So based on that, it's going out 1280 bid. You could see that the buyers are in the money, in the profit. So on average, the buyers at 809, even looking just at the bid alone, not the midpoint, but the bid alone, they're already more than $4 in the money, more than 50% return, right? From 809 to 1280. Let's look at the history, because now we are getting an indication that historically this also traded 4 times. We've seen it. So click on that. And here we see that it traded on March 11th, March 20th, March 21, March 22. But they were very small, the volume 4, 4, 2, and 6. So nothing significant, nothing like we saw yesterday. Traded March 11th as high as $15. Then traded down to $5.34, 852, 371, but very small. So probably not really related. Doesn't look, consistent with the volume from yesterday. But just to get that historical perspective, that's in this report as well. So I am coming up right up at 9:30, Will, but I just wanted to go over an example of going through one trade in more detail.
That was great, D. We did have a question from a non-Chameleon user who came in earlier. Let me get that question. He asked, and we can go over it tomorrow. We don't have to do it today. He says, I'm not a Market Chameleon user, but I do trade covered calls, cash secured puts, and debit spreads. What are the main benefits of Market Chameleon? I guess concerning those. I'll copy that question down. Maybe we can go over some of them tomorrow. In the meantime, I will put some videos you've done in the chat on covered calls. At least I found a couple, and you can look at those. If you have any questions, come back tomorrow and D can answer. Yep. Great job, Dima.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys